Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's the senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks very much for having me on.
So, are things going glowingly for uranium now?
They are. I think in our last interview, I might have told you that I put out a uranium report for my subscribers a few weeks ago. And I've been making uranium picks for subscribers in both Wealth Supercycle and Supercycle Investor. And am I glad I did? Because the actual physical market is starting to tighten up. Because we have seen Kazakhstan and Cameco both withdraw uranium from the market. Now, there's a mine in Africa that might do the same, might actually shutter its doors, which will take more supply off the market, and the demand equation, just keeps, cranking up to the upside. So we're starting to see tightness in the physical market, and this has lit a fire under stocks like Cameco, which is up strongly today as you and I talk. And so, and these stocks are still way cheap compared to what they were years ago. And at the same time, the companies have become more efficient. Many of them, not all of them, have actually raised production, and the explorers have resources that are now much better defined. And so, there is some incredible value in this area, and people should really consider picking some of that up.
Is this because a number of atomic plants are planned in countries like China?
Well, yes. They now have, I think, 38 atomic power plants in China. That's part of it. It's also because Japan is switching its nuclear power plants back on. Remember that it shut them all off after like Fukushima, but one after another. They are starting to bring those nuclear power plants back online. And so, that's just ramping up demand, especially because one of the things suppressing the price was that those Japanese power plants, which had shut down operations, were then selling their nuclear fuel into the market because, they didn't need it, right? So now they have to restock and refuel those reactors that they're turning back online. So that's yet another bullish force in the market.
Is it because people also look at nuclear plants as being clean energy?
They can be, and I know some people really bristle at that, especially with the accidents we've had. But they're cleaner than, say, coal, right? Which, by the way, most coal burning releases radiation into the atmosphere because there's uranium in the coal, so it gets burned up and just ejected into the atmosphere. So you can have a coal-fired power plant that releases much more radiation than a nuclear power plant, which isn't supposed to release any when things go right. The thing is that the new generation of nuclear power plants is much, much better and much safer than the old generation. Now, you will hear people saying things like, well, these new plants won't melt down. Nothing can go wrong at these new plants. I cringe at that kind of language because nothing was supposed to go wrong at Fukushima. That said, they are much safer. They are much better plants. And so, yes, due really to the fact that the sun doesn't shine at night, you need something to work as a backup for things like solar power. And last year, China saw a huge boom, a huge build-out in solar power. It needs something to rely on when the sun isn't shining. So that's one of the reasons why nuclear power is starting to look better and better.
Yes, I also cringe when somebody says nothing can go wrong. After all, the Titanic was called unsinkable.
Yes, that is a problem.
The U.S. dollar is on a tear.
Isn't it, though? I mean, wow. The U.S. dollar, I think, had its best month in years. And it just turned positive for 2018. And, yeah, April, it was up 1.9%. And that was its best month since November 2016. And, so, just on a tear. Why is this? There's a few reasons. One is because, right now the U.S. Fed is meeting, and that meeting concludes on Wednesday. And, when that is over, people expect the Fed to issue language hinting that they'll raise their benchmark interest rates 4 times this year rather than the previous 3. Previously, people had expected them to raise rates 3 times this year. Now they think they'll raise that up to 4. In the meantime, over in Europe, they're actually putting the brakes on their tightening efforts. So, if you want your money to earn interest, and you think the U.S. will be raising rates faster than Europe, naturally you'd move money from Europe to the U.S. At the same time, the U.S. just passed a income tax plan that kind of forces these companies to repatriate all this cash that they have stashed overseas. Now, they get to do it at a very good tax rate. Some might say kind of a steal. But the fact is that it's really in their best interest to bring that money back home. And so, what do they need to do when they do that? They actually need to take it out of euros or yen or else wherever it's in and put that into U.S. dollars. And that helps push the dollar up. And let's add on to that the fact that there was a large speculative short position in the U.S. dollar. There has been for a very long time. So, naturally those shorts are being squeezed, and so they're exiting it. And you put all these things together, and the U.S. dollar is going higher. Now, personally, I thought 92 would be kind of overhead resistance for the U.S. dollar for a while. I thought that it would maybe take some time to actually work through that level, and it is blowing through that level like just a thin sheet of plastic wrap, just boom, right through it. I don't know where it's actually going to go. It'll be quite interesting. I mean, we'll just have to see how it works out. The next overhead resistance is at 94. So if this isn't a one-day wonder, and it continues on moving like this, then it could go up to 94. Now, many of your listeners do not play the currency markets. They say, oh, so what? Well, this also affects gold. Gold has been under a lot of pressure recently because of the rise in the U.S. dollar, because gold is priced in dollars, right? So we are seeing tremendous pressure on the U.S. dollar, which, as you and I talked, dropped as low as 1302 today. It's at 1306 recently. The gold miners are outperforming actual gold itself, which means that there are some that are going up, but they're not going down as badly as gold. So that's kind of a bullish indicator. I don't want to throw in the towel on gold at all. I have been watching 1300 as like a level that like we would see gold head down and test, and then I was expecting, well, it'll probably bounce, but if it actually closes below that on a weekly basis, that could kind of be scary, you know, that could put some more fear into the market. Maybe it's 1300. Some other people who are smarter than me, and I'll admit that, say 1280 is really the important level. I don't know why, you know, they just happen to like that. So, whatever your level is, gold is going down in a hurry because the U.S. dollar is going up in a hurry. And so we'll have to see how this works out. There are strong fundamental reasons why gold should go higher, but I think I said this last time we talked, so I don't want to repeat it too much, but the market can remain irrational longer than you can remain solvent. That said, and I have to emphasize this point, I have my subscribers in a bunch of good gold miners and producers that are actually holding up very well under this onslaught from a surging dollar. And a lot of gold miners and producers are holding up very well. So, maybe that's telling us that this is a short-term setback in gold and the next move is going to be higher in a hurry. Maybe people are just realizing that these companies have just been becoming so much more efficient and have good prospects that we should be in them anyway. Maybe people are just moving into those as a hedge against inflation. And there is some sign of inflation on the horizon right now. And there hasn't been for a very long time. So, we'll have to see how that works out. But definitely we are seeing a stronger dollar, stronger than I thought it was going to be. I thought 92 would stop it, but it seems to be pushing through that, which makes 94 my next target. That is going to put pressure on gold. It is doing that right now. We are seeing gold head down lower. I expect a test of 1300 this week, but other people are calling for a test of 1280. We'll have to see how that goes. In the meantime, miners are holding up better, which is generally a bullish sign. That's pretty much the whole summary right there.
We'll have more with Sean Brodrick right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Sean Brodrick. Sean, on the crude oil front, what's happening there?
Well, I mean, crude oil, I actually ran a poll on this. Funny you should mention that. On my Twitter account, asking people, do you think that the price of the U.S. crude oil benchmark will hit like 70 before it hits 60? And at the time, crude oil was trading at like 67, and like most of the answers were, oh, this thing is going to 70. You know, people were absolutely sure. Well, it went up a little bit, but it is down hard now. Again, a lot of the stocks that are leveraged to the price of oil are actually doing okay. This is not necessarily a bad thing for the industry, because I think a lot of people, investors, are thinking, well, you know what? Sure, oil could pull back here, but I'm investing in companies that can do quite well at, say, $60 a barrel, can do very well. And so, oil has gone up so much that really there are many of these companies that were beaten down into the dirt that look very attractive, even if the price of oil pulls back. And also, we are starting to see some pushback from consumers on the price of gasoline, which, as you folks in Canada know, has really gone up a lot very quickly. And there's some pushback on that. And so that might crimp the advance in oil. We'll have to see. One thing I would say is that the price of electric cars is really going down. So in the next couple of years, we are going to reach price parity between an electric car and one that has an internal combustion engine. And that might be another tipping point we will have to see there. I am still bullish on oil in the longer term. There's so many uses for it, and especially around the world. The whole world wants to drive like us crazy Americans, right? They all want a car. So there's plenty of bullish reasons for oil to go higher, but it's not going to be a straight shot. Just this past week, I saw someone roll out a price target of $300 for oil, and I just about snorted my coffee through my nose at that one. Because, you know, I mean, there are just so many obstacles to that happening. I just don't see that happening, at least not in any definable term, and in the long run, we're all dead. So we'll see how it goes. Unless there's some tremendous black swan we don't know about, and of course, just by the very nature, you don't know black swans until they hit. I don't expect that to happen. The most bullish thing that could happen for oil right now, I mean, at least is on the horizon maybe, is a real collapse in the Venezuelan economy. It's really teetering right now, and they aren't able to purchase foreign oil, or at least they're having a lot of trouble doing it. And that's a problem for them because they actually pump this very heavy, very thick, ultra high density crude oil, and so that needs to be cut with other oil so it can be turned into a product they can actually sell. If they can't buy the light crude, and it's hard for them to sell their own crude, and so their whole economy, which depends on oil, is. I have an article being published today, as a matter of fact. This is Tuesday, that shows what's happened to like Venezuelan oil production, and it has just fallen off a cliff. It could go lower. Venezuela currently produces 4.7% of OPEC's total production. If it really has a collapse, that could bullishly affect oil prices, global oil prices, because prices are made on the margin. I don't know if that's going to happen in Venezuela. That's a really chaotic situation. Very hard to predict. That's about the big bullish thing that I could see in the near term, along with maybe global growth accelerating. That would be another bullish thing for oil. But there are risks to the downside people should be aware of. So if you're buying oil companies at this point, and I recommended one recently, so I'm not going to say you shouldn't, then you should really focus on those companies that can make money at $65 per barrel, $60 per barrel, 55, 50, that can really make money even if the price pulls back for a bit, because this could be a wild roller coaster ride. You want a company that'll be okay in any kind of environment.
We'll have more with Sean Brodrick right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, Canada will be legalizing recreational marijuana in the near future. What is that doing to marijuana stocks?
Well, it should be pumping them up, and instead, some of them are just trading so badly. It's not really, looking good. So we'll have to see. I mean, heck, I own marijuana stocks myself. I also own hemp stocks, which actually has I think, better outlook because of some action being taken in the U.S. Congress. The problem with legalization, and people have to realize this, is that if it's legal, that takes some of the price incentive out of it, because then everybody can grow it, and the more you grow of something, then the less scarcity there is, so prices will go down. We've seen this happen in all sorts of U.S. states that have legalized medical marijuana, and you have a little more price support in, like, Canada, because it's so closely regulated by the government, but still, there's probably going to be some downward pressure on prices, and that's being priced into stocks right now. So, we'll just have to see how that works out. I think there are still some great stocks in the cannabis industry. I think that we could see a ramp up, maybe starting in June. That could be tremendous. So I wouldn't give up on this sector. I think that we're going to have a great time. And there are individual stocks that will outperform anyway. Maybe we won't see the wild ride like we saw last year, but we could still have some tremendous opportunities. And, it would be nice if they started to earn some money. But some are earning money. That's yet another thing. I mean, now we are starting to see some of these companies really come into their own. They're not really earning a lot per share, which is why some people say they're overvalued. But as long as they have tremendous growth and they can grow into that, well, we saw tech companies do the same darn thing. Speaking of earnings, though, I did want to mention that S&P 500 earnings, and I hate to keep bringing it back to the U.S. when you have a largely Canadian audience, but you know that, like, when the U.S. catches a fever, then Canada catches a cold.
We're worldwide, Sean. We're worldwide. We get questions from the Netherlands and South Africa. So,
all right, well,
we're globalists.
Well, one thing to keep in mind is that the S&P 500 earnings have been fantastic. Earnings growth for Q1 so far is 23.2%, and that is the highest earnings growth since the third quarter of 2010. That's a heck of a long time. So, fantastic earnings growth. And yet, every rally in the stock market seems to run into trouble. What the heck is going on? I recently saw a report by Morgan Stanley, which said, you know, we are seeing earnings boosted, but it's due to a whole bunch of short-term, one-time things like the big tax cuts that I told you about, stuff like that. And so that makes this earnings boost kind of unsustainable. And they're looking longer term. They think that for the rest of the year, earnings could disappoint. And they're not the only ones. And that's why we're seeing stocks sold right now. Now, I do think there are other bullish things for the market. But you have to remember that the bears will keep selling on every opportunity. And if there's a really bad piece of news out there, like, say, trade war with China, not that I'm saying there's going to be one, but there is, you know, we know potentially that could happen. Well, if there is, then we could see a big correction in the market. I don't think it's going to be a crash. I don't think anything like that, but, you know, I mean, you could see, you know, a pullback of like 20%, 30%, maybe more, if the right ingredients come together. And I think, that people are starting to price that risk in. And so that's why we're seeing stocks really behave in a very irritating way recently and in fact, we've had stocks in our portfolio like this that reported great earnings and got sold off like a hot potato. Just like down, down, down. Which seems to make no sense. But, there are important people on Wall Street that are thinking this is as good as it gets. Personally, I would like those people on Wall Street to be wrong, and I would like it to cost them a lot of money, but at this point you can't argue with the market. So that's one thing to keep your eye on. You should keep looking for new positive catalysts that can actually make people feel more comfortable about this market. Because the way things are, the big money is very nervous about the market. And that's being reflected in the price action.
Sean, thank you so much for chatting with us.
Thank you. I always enjoy it.
Sean, what other websites are you the editor of, by the way?
Edelsoninstitute.com. I am published there Tuesday and Saturday. That's our free portal, Edelsoninstitute.com. And I also write the monthly newsletter, Wealth Supercycle. That's the one where I recommended Cameco, for example, before it blasted off. And then I have a premium newsletter called Supercycle Investor. And I have other, you know, investment ideas in there. That's more short term and like stuff like that. But all of my publications are really aiming to ride big cycles. What I see is big cycles. Now, big cycles could be delayed. That can happen and like stuff like that. But I have been right on things like electric vehicles, lithium, cobalt, stuff like that. Those have all worked out. And I think there are plenty of other big cycles to ride. There's a lot of ways to make money in this market.
Sean, thank you again.
Thank you. I always appreciate talking to you.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.